Well, good afternoon, everyone. You are tuning in to the Fix, and we got some music on in the background on this Friday afternoon for you. So sit and enjoy it for just about probably 30 seconds or so, and then we will get going.
That's when you sing the intro song, right?
Not singing an intro song.
That's what I was told.
Oh gosh, you guys.
We apologize to everyone. Poor Melissa's feeling under the weather. We had an entire theme song, a choreographed dance routine, but it's just not the same to do it without her.
We can make her do it next Friday. How about that?
I even took off my sequin top when she said she couldn't make it. Figured it'd just look silly if we weren't singing and dancing.
I did have the cape all ready to go.
Oh my goodness. You guys are silly. All right, Amy, I think we're ready to go. So thanks for joining us this afternoon, everyone. This is our Friday afternoon show, The Fix. We changed up content a little while ago. I think that Melissa's kind of prepped those of you who have been on in the last 2 or 3 weeks for that. This we are changing so that we are actually pulling questions from our network. Melissa pulls them out of a gigantic fishbowl. I do not have a gigantic fishbowl. I'm probably never going to own a gigantic fishbowl. She is out ill today, so when I am doing this, I have to find something else to put the questions in. So for today, it's a day late, but it's a cauldron. So we're going to use a cauldron to pull our questions out today. And super lucky today, joining me today, Mike Metz, operations manager at VIP Mortgage. He does so much more than that, you guys, but that's the title he uses. And Bryan Traylor, who is the SVP of residential lending at Centier Bank. Thank you both for doing this. As you've experienced in the beginning, this could be a little lively with these two. So hang tight. But good conversation for a Friday afternoon.
I saw last week's recording, and we never got the full answer on what happened with Aaron D. and the Secret Service guys that she got involved with. I want to throw that question into the cauldron so that we can find out more about that.
Well, I don't know the answer to that one, but now that I didn't even know there was a question like that, so now I'm going to go direct to the source and see what I can find out about that situation. Any questions that you want in here, Mike?
I was just going to ask if she's joined the Secret Service now. A good weekend gig.
That would be a very interesting situation, I think.
I'm afraid of her already, so she could do the role.
Oh my goodness. Well, let's get going here. I'm going to mix things up in here, and I am going to pull a question out of cauldron. I have not even read these, so pardon me if I make mistakes as we're going along here. This one is quite long, but here we go. There are more and more condos that we are seeing with insurance issues, and the requirements the agencies have on master policies, including the max 5% deductible, inflation guard coverage, sinkhole coverage, etc. Recently, we've seen investors announce that they are no longer allowing financing on condos. This is very interesting, even with their appetite to restrict an entire segment of lending. With the increased HOA developments, this is and can really become an even bigger issue. What are you seeing and recommending?
So this has been a pet peeve of mine for a while, and it's been one that I've been raising the hands on. So for those unfamiliar with it, if you're not doing a lot of condos, there are a whole bunch of guidelines specifically about deductibles on the master policy, and those have been kicking a whole lot of condo problems into gear. So especially in some markets, so Denver is one that particularly has been a big one lately, where there's specific guidelines for like wind hail deductible and max deductibles. And we're running into a lot of problems where there's a lot of condos now all of a sudden that are no longer warrantable. And there's not enough whiskey in the world to go through and try to talk to the insurance companies and figure out, okay, can you get it? So the problem is there's some insurers that can't even get policies that hit the guidelines with the deductible availability anymore. So we've seen in some markets up to 20 to 30% of the condos have moved to non-warrantable over the past year.
That's a lot.
And that's where some of the investors are saying, I'm out. And the main thing that I was suggesting in the past for people is get set up with some of the brokers that allow for non-warrantable condos. There are some that will still do non-warrantable, even with the master insurance issue, if it's over the max deductible. The problem we've seen is some of them are getting so many now that they are saying, hey, in this market, I won't touch the non-warrantable condos anymore because of that. So as always, advocate, talk to your reps, ask them about it so we can get on the radar as much as possible on it. And it sounds like it is something that they're constantly discussing, but haven't seen any adjustments yet.
Yeah, we haven't really had too much of a bad experience with this. Yeah, we're Indiana based. Most of our lending's in Indiana. Condos, I mean, we have them, but they're not prevalent like in other markets. We're just going to the letter of the GSE guidelines, and then we have a portfolio product where primarily we will lend on non-warrantable condos that perhaps our commercial side has the loan that, the development loan for that condo complex. So we're kind of already in the game at that point, and we may put the non-warrantable condo on our books, for that purpose. But overall, we haven't seen as big an issue with it in the little central Indiana bubble that we're in.
Well, it's turned into something really good for Kelly Haney in the chat. If you aren't watching the chat, in that we do have a condo session during our 12 days. So Ashley has agreed that if he will do it with her, she'll make it into a drinking game for him that afternoon. So we've got some side deals working over in the chat.
Deductibles, warrantability, and if you add roofs into that one, because roof coverage and escrows, that will make sure that everyone except for maybe Femi is trashed by the end of that session.
Femi has a different tolerance than some of the rest of us, I would say. All right, I'm going to pull out the next question. And this one looks like it's not an industry question. It's more one that's more personal. And I know Mike is going to have an answer for this for sure because of his background. So what are you reading now? Any good books or podcasts that we should all know about?
So I am just finishing up a biography on Teddy Roosevelt that has been actually a pretty good read. You have to get past the very beginning. I'd say just skip the first like 15% where it's family. But for me, it's fascinating just because you see how many political problems were happening back then and how many parallels we have to the exact same problems right now, which is fascinating. And also being from Arizona, I didn't realize that he basically just bypassed Congress and made a whole lot of national parks everywhere. And that includes the Grand Canyon. So it's been a good read.
So I've got a little different twist. I grew up in Eastern Kentucky, went, Eastern Kentucky public school education. So I just got done reading the Princess Mackie Buys a House book. If you're not familiar, that's the book that the MBA is kind of pushing for low to moderate and CRA populations. And I had bought the book because we were looking at buying a bunch of them, and I wanted to read it myself first. I am happy to say it does read on a third grade level, and that's only one grade above where I read. So I was able to get through that one in a couple of days, and in all seriousness, it's really good for not only the kids that may receive this book, because we're looking at buying some to hand out in our branches and things, at closings, anything along that line at some education events. But not only is it good for the kids, but it actually think it's geared as much for the adults that may be reading the book to the kids. It gives them good insight on things, first steps to take and things like that. But so that is, in all seriousness, the most recent book I've read, which, so I bought it. I read it at my house, and then I mentioned my puppy earlier. My puppy got a hold of it and tore it all up. So when I was at the NBA National Conference, they were giving them out, so I got a couple of more so I can give to our CRA officer and get her buy-in on, hey, yeah, this looks good. Let's get a couple thousand of these and hand them out in the neighborhoods.
That's a good tip for everyone. I didn't know such a thing existed.
Yeah, I wish I had it within arm's reach. It's a beautiful little pink cover. But it's the NBA is kind of pushing that as an objective right now to get that in the hands of the CRA markets.
I
Yeah.
feel like there's not enough kids book about mortgages, so we should probably do like an alphabet mortgage style. E is for escrows, and we can do a session on it at the next TMC event, and we'll
D
just
is
make
for
the
denied.
alphabet for everybody. Yep.
Oh, yeah, that's an interesting idea for sure. And for those of you here, it is not a green screen. If they're thinking your background is a green screen,
It is a real wall.
it's a real thing. Mike can probably pretty much reach the top shelf.
That's what I was going to
There's
say.
a ladder there for the rest of us.
I was going to say, he's a pretty tall dude. I can't imagine him needing to get up on that ladder. And if so, those are really high ceilings.
Well, he does have a spouse who also I know is a big reader. So, and they've got a wee one that has already its own library started. So
He's still working on the first shelf.
yeah, yep. All
You're
right.
going to have to move all those books up as he gets bigger.
Yeah.
For sure. We're gonna grab another question out of here. Bernard, we can have B for Bernard for sure. Bernard Nazuli, we can do that for you.
I'm fully supportive. Bernard's a good dude and has a great product if anybody's not using it.
Yep, absolutely. Okay, here's the next question. Our company is rethinking a lot of our workflow and sales cycle. How are you considering which things to automate and which things to continue to have your team do?
Well, all right. So I'll take a crack at this one because our environment is a little bit different. We are a community bank, and uh, we have a strong family atmosphere within the bank. It's a family-owned bank, and not only is the family own it, but they treat everybody like family. So part of their commitment to the bank as a whole is that we do not and have never in the 129 years we've been around, we've never had a layoff ever. So we will not lay people off, when times turn down. So this question is actually near and dear to me because when I inherited this department, gosh, I guess it's been 8 years ago now that I took over as the head of the department. We were drastically overstaffed, in my opinion. Now that worked out into our favor when 2020 and 2021 came. But we have done zero hiring and have by attrition, we've been able to get our staffing counts down to what I would call right size. So now that we're kind of where we need to be, in my opinion, I've got to think about that next boom, however far out it's going to be, and what do we do then? Because I can't hire a bunch of people because then I won't be able to lay anybody off when things turn. So I am constantly looking at scalability, and I'll throw out a name here. I just recently have been talking to the guys over at Trained, and they've got some really nice automation, software out there and some AI things going on that I'm looking at in order to think about, okay, more people, we can't have that, but more automation, to help the people that we do have. That's kind of the way we're looking at things going forward, just more scalability. And not that Trained does this, but some other vendors have some automation out there that's pay per use. And for us, that's phenomenal because right now when volumes aren't as high, I'd like to keep our people busy. so we could, take out those pieces that we pay per use, have those be done in more of a manual process, not pay for those automations. But then when times get busier, kick the automation back in, make things a little smoother. Plus, it keeps that knowledge base there when, if they're able to do things manually now, and might appreciate the automation when it comes in the future. So, kind of a long-winded answer, but I've been living this for several years, and it's something that's always on the forefront of my mind.
You, Mike.
Good answer. We have some similarity on that one. I'd say kind of two different main efforts that we've been doing on our side from the upfront and kind of changing up the sales cycle. And one is doing more of the taking out the third party documentation, even on the upfront side. So we have a different department that just handles those third party departments. We call it VIPCO because I'm not creative. And they handle, the VOEs and the ordering of all those. But then, especially in today's environment, as there's more options for VOEs and other solutions like Truve to get direct pay stub information and CoreLogic for self-employment, having them to help with some of those options, both to help in reducing your third-party costs, especially against some more expensive alternatives, I'll say. And then also just checking for that.
Okay.
Yeah. And then from there, just making sure that they're not having things reordered. And I'd say pairing that with automations, moving that up front as much as possible. Trained is a great one to bring up just because they're very easy to implement. Femi had asked me yesterday, and to me, that's where Trained is a very easy one. Is it's easy to implement. It goes in and checks your driver's license, make sure that the name matches up to the system, it matches up to, it's not going to expire before the file is going to fund, and just doing as many of those little checks as you can on the upfront side, whether it's DDM, having automation of the VOA request, having some of the things they have a homeowner's insurance check on the Train side as well, just so that you can kind of go through and get as much clean information on day one as possible to help speed up the rest of the process, but to keep sales then from having to get into the weeds as much as possible and just focus
Kind of
on the customer
focusing on other
service.
things. Yeah.
Yeah. And that automatic validation of data is phenomenal as far as, there may be information that's not immediately important to us right now, but some of that data that we keep down the road, it may, prove to be a valuable resource for analytics of, sales opportunities, things like that. So even, information that you may not double check today, if you've got some automated way of checking that, I mean, that's a no-brainer. Just keep the data clean.
Mhm.
Ira had a suggestion in the chat that another book that could be created would be How the Fed Stole Christmas. If anybody wants to get to work on that one, let me know, because we could maybe incorporate that into our 12 days of TMC, which starts on the 2nd of December. So there is a contact, Jeff, for Trained. Someone from my team can get that over to you. They are in our network, and so we will happily share that information out to you. Let's grab another one from the spooky cauldron. See what this is. What was your favorite Halloween costume growing up?
Go ahead, Mike.
Or not
So
growing up? Now.
I'll go with the grown-up version of it and the one that caused the most chaos. So we used to be in a 6-story building, and that building would do the fire alarm and test it out every year on Halloween. So everyone would end up going down to the parking lot, all 6 floors of us, in costumes. And one year I went as the Jolly Green Giant, involving green body paint and a handmade green toga with leaves. One, do not suggest going to the workplace covered in green body paint. 2, as we were going down the fire escape, I slapped a handprint as high as I could. Years later, that green handprint is still there.
Wow, that's awesome. Yeah, I
That
can't.
is fabulous.
I can't beat that. I can't even come close. I was going to say my, who's the I can't even think of the band name now. The guy that sang, it was he wore the shirt and tie and had the background singers that the
Oh, Palmer,
yeah.
Robert Palmer.
Yeah. So yeah, I went as Robert Palmer, and my wife and her friend went as the background band dancers. Yeah, that was a pretty good one. But the problem I had with that was when I wasn't with them at the party we went to, everybody was asking me for hors d'oeuvres and drinks because I looked like I was, there serving.
We used to do something when a number of years ago, we did like one year, all of our friends were characters from the Wizard of Oz. And we would go to different bars and try to win their costume contests for the year. Pre-kids, so it was a long time ago, but that was probably my favorite one. All right, let's get another question out here. Work-related question. CFPB's actions against Fairway have pretty widespread implications. Are you adjusting any of your practices or anticipating IMB's needing to meet CRA requirements in the future?
I'll take a swing at this. Are we adjusting our practices? No, because we are a community bank and we are heavily scrutinized on redlining, CRA, all of this. So we're already under the microscope. We're just, happy to welcome the IMBs to the petri dish to be looked at too. So no, we're not having to adjust anything. We're just, I'll be real honest. It's, our IMB partners have a few advantages from a business standpoint on us, and every once in a while, I don't hate to see them get pulled into the mix like this. So it's going to be more the merrier in the petri dish as we're all getting examined for CRA issues and redlining issues.
I did read through the paper, and if you go through it, we have Bernard on the call as well. And they do really get granular with exactly how they approach the data. And they got into the HMDA and they really were looking at a multi-year range. And then they were really looking for what they considered to be statistical significant differences in HMDA data. And I won't go into a lot of, what they were finding, but they did. You can see that if you're using HMDA analysis of your own data, and there are partners that will help with that, they were looking for multi-year, what they called statistically significant trends on that one. So I think that is always a good thing to be doing regardless, is looking at your HMDA data and looking for trends. And then there are some very smart partners who understand that super number magic that's, at a whole different level, along with like secondary for most of us, that can help with that analysis.
Yeah, for sure. If nothing else, I feel like obviously we're a combination of depositories and IMBs here at TMC. You probably, whether it's going to be implemented or not, you probably should be looking at those numbers anyway, honestly. iEmergent, who Bernard and Laird Nasuli own that organization, is part of our network and are always willing to help our membership or anyone outside our membership for that, as a matter of fact. Bernard mentions, Bryan, your costume. It was because people wanted to interact with you because you're simply irresistible.
Thank you, Bernard. That means a lot coming from you.
Oh, and Femi, if you're on and you're willing to give a shout out in the chat of what your favorite costume was, people are interested in knowing. And Andrea Lefebvre, who is on, I see your hand raised. I don't know if that was you just clicked something or whether you have a question. We can't bring you into the conversation on this call, but we will gladly take a question in the chat if you do have one. So stick it in the chat if you've got one. All right, let's move on to the next one. On an FHA loan where there is not a it says RESPA, but my guess is RESPA.
Oh, if you're not familiar with RESPA, we're all in trouble.
Yeah.
I mean, you should really
You
be
didn't
on
get the
top of
theme
this
song.
thing.
You didn't get RERSPA.
I told you I didn't read them ahead of time. Arrest application, do you allow your LO and or processor decline? For example, a TBD with a 499 FICO.
That I can handle that one. It's pretty easy for us. We do not allow LOs to deny anything. So if we have somebody that comes in with a 499 FICO, what the LO can do is they can submit the file for immediate decision. It goes to our underwriting desk, and we have a staff member on our underwriting team that dispositions such files as this. So it's not somebody that is one of our high level underwriters, more of a junior underwriter level.
Yeah. How about Mike?
We have a separate adverse group that handles those requests for adverse, and specifically to this question on the upfront side, we still have them process that, as our last question was talking about HMDA data. There are very real reasons to be very careful with HMDA data, and that is one where loan officers, even though I can understand the desire to have them just be able to speed through, if they're not clicking buttons correctly or they're just making assumptions, I think that probably opens up more data risk. And to me, I'd say the other thing to explore, if you're just looking to not try to burden others with handling those, there are some automations you can take a look at that some have developed for certain adverse actions. So including Matchbox Ignite that can help with some of those scenarios and help speed up the process.
Yep. And Matchbox Ignite is a partner of ours also in our network. So appreciate that little shout out. Femi, for those of you not watching the chat, has work-friendly and also not work-friendly stories related to Halloween. There is no surprise in that statement. His go-to these days is an inflatable hippo with a tutu costume. There's also a recommendation in the chat that he would be an amazing Maui from Moana. So
That'd be a good one.
Year. You got a year to plan, Femi. All right. Next question, and probably last question here, guys. Fannie and Freddie announced some enhancements to appraisal waivers this week. Since I think we may see more value acceptance plus property data in the future, how are you handling those data situations? Are you getting a full appraisal or having your appraiser or AMC collect the property data?
So if you didn't see the memos, they just did, I think they announced it at MBA and then released their papers. So they made the appraisal waiver up to 90% LTV, and then with the PDR up to 97 LTV. So I do think it's more likely that we're going to start seeing more of those. In their little analysis, they did find that when they looked at CU scores and performance on those using the ACE plus PDR was within 1% of the full appraisals on that one. So it does look like they are performing well. What we have seen on the street so far, most AMCs and others are doing those PDRs. And they did open those up to where other non-appraisers can theoretically do those. And I think we're probably going to see, especially as they up this, more tech partners get into that game. And so like for us in our markets, if an average appraisal is like 500, we're seeing those PDRs come in at more like 250. We're still not seeing a lot of traction on those, but you are seeing more. So I would say reach out to your AMC partners on those. And it's probably a good time to do a refreshed training with the troops, because most people are just looking at their AUS for property inspection waivers. And then if they see the ACE PDR, they just order the appraisal and move on. And I think especially with these increased guidelines, we're going to see more of those. So it is good to get those set up.
Yeah, and we're kind of right in the same basket there. We're ordering the PDRs through our relationship with Dart. They're getting those over to us. We're not having any issues on having to buy anything back or performance on any of these loans. We're servicing them all ourselves. what we have had a couple of times was if a loan officer or a borrower wants to change some sort of terms of the loan, that we lose that waiver or PDR option and end up having to order the appraisal anyway. So haven't worked through all of that entirely yet because that's still happening, but I'm not sure there's a perfect solution for it because as you perhaps these LTV enhancements will help grab a larger piece of that pie, so that it's not an issue going forward. But overall, I think it's been very valuable. I think it has saved time and we haven't had any sort of issues on our end in using them, and we're not ordering appraisals in place of the PDRs when they're acceptable.
It is worth noting to anyone who's looking to start using more of those. One, if you're an Encompass user, the reps and warrants tracker does help in watching for those opportunities for ACE and PDR with reportability out of those. And then two, if you're using, for example, with Freddie, their eco, it does have a specific report just for looking out for those opportunities to kind of help at a more large level of, hey, how many of these do I have that potentially are being ignored, but we could look to be doing more with?
Perfect. One thing in the chat, great idea if your team wants to do something for Halloween next year. Gibraltar Savings back in the 80s was a full haunted house. So their team became a full haunted house. That would be a great idea for your team. I think they would probably get on board with that.
They could, I mean, haunted house, everybody's just dressed up as underwriters, right? Underwriters and QC, right?
Compliance.
Yeah, maybe some compliance people in there.
Forgot compliance. Yeah. Oh, very funny. And join us. We're 12 Days of TMC, like I mentioned earlier, starts on December 2nd. We would love to have you join us. Your whole team is invited for a whole damn company registration of $395. So if you've ever registered yet, please do that and join us. Bryan and Mike, it is always a pleasure. Thanks for making this a super fun conversation on this Friday afternoon. Appreciate you both.
Hey, thanks for having
us.
Yep. Bye, guys.
Bye-bye.